Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. The news: yesterday's market tantrum is over. Wall Street has recovered most of yesterday's losses as investors considered whether the sell-off driven by Italy's unfolding political drama might have been overdone. And there's been some positive data news, especially the forward-looking stuff. Firstly, in the US, the Federal Reserve reports that economic activity expanded monetarily in late April and early May, with few shifts in the pattern of growth. The Dallas district was an exception, where overall economic activity sped up to a solid pace, and manufacturing shifted into higher gear nationally, with more than half the districts reporting a pickup in industrial activity and a third of the districts classifying activity as strong. This weekend, we'll get the May non-farm payrolls data, and markets expect to see 190,000 new jobs created. Today, ADP released their data, and that showed a gain of 176,000 new jobs in May. That is an improvement over April, but it is lower than May a year ago and the second lowest gain of 2018. Also sagging a little is US economic growth. We got the second revision of the first quarter GDP growth overnight, and that revision was down to 2.2%, and it's the slowest rate of gain in almost a year. In Canada, their central bank gave an upbeat assessment of their economic prospects. While they left their policy rate unchanged at 1.25%, they have laid the groundwork for a rise or multiple rises later in the year. Somewhat surprisingly, inflation in Germany is on the move higher, coming in at 2.2% in May. Markets are only expecting a 1.9% gain. And having fallen rather sharply in March, the April growth rate in world air freight has picked up again to 4.1%. International air freight growth is up to 4.9%, and growth in the Asia-Pacific region is higher still at 5.6%. And the OECD agrees that pessimism is overdone. It says that the global economy is experiencing stronger growth, driven by a rebound in trade, higher investment, and buoyant job creation, and supported by very accommodative monetary policy and fiscal easing. It also says that our new government's continuation of the economic settings from the previous one is a good thing. And Indonesia's central bank has raised its benchmark interest rate for the second time in 2 weeks late yesterday by another 25 basis points to 4.75%, and signalled more increases might be coming as it seeks to bolster their currency and contain capital outflows. US Treasury 10-year yield has recovered to 2.84%, and that's up 5 basis points as Wall Street seems to accept that yesterday's fall was an overreaction. The Chinese 10-year is at 3.62%, that's down 2 basis points, while the New Zealand equivalent is 2.75%, down 1 basis point. Gold is also down slightly to $1,301 an ounce in overnight trading. Oil prices have jumped back up today. They're now just over $68.50 a barrel in the US, while the Brent benchmark is now just over $77.50, both a rise of $2 on the day. And the Kiwi dollar will start today at 69.9 US cents. That's up nearly a cent as risk appetites return. On the cross rates, we're also firm at 92.3 Aussie cents and now just over 60 euro cents. That puts the WI up to 72.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.